Take a look at this chart and tell me, what do you think it is? What price is this an asset? Or what asset price are we looking at here? Over what time frame? Curious, just take a guess. And while you're doing that, welcome back to the crypto simulation. We're going to take a look today at Bitcoin, cycle theory, the fallacy of cycles. And we're going to answer the question, does Bitcoin really have cycles? And if it does have cycles, what should we expect out of its price action? So just as a reminder, this is not financial advice. I'm not a financial advisor. I'm also not psychic, so I can't predict the future. Any price predictions that I make on this channel are to be considered purely for entertainment purposes and not to be taken to the bank. With that being said, let's show you what you've been looking at. You were looking at a 1-minute chart of Bitcoin. And what do you notice about this 1-minute chart? Let's kind of take a look around. It has all the features that you would come to expect out of a market cycle. A full market cycle, right? But this is a market cycle over minutes, a market cycle for ants. You've got your bullishness, and this looks like a distribution phase. You've got your like summer lull, a little bit of chopping around here. You pop back up, then a V-shaped recovery. This is, and then this, it's like testing a double bottom almost, and then off to the races. We're in a bull market over the span of, not that many hours. And yeah, it's a fully intact bull market basically. And then you hit your blow off top and you go straight into a bear market. And this is on a 1-minute time frame. And so is this a cycle from bull to bear, back to accumulation phase, right? And then eventually maybe we find ourselves in another bull. So this is occurring on a very, very short time frame, but then even within these time frames, you can kind of point to certain, structures. Like this looks kind of bullish here. If you wanted to go down to like the second, you go to 1 second intervals. Let's, look at that for a minute. Sorry, the data is not great here, but you can see over 1 second intervals, it's not hard to spot a bull market. Or here's your beginning of your bear market accumulation phase that we're in right now. So are these cycles? What do you think? What about this chart? What is it? What time frame? Which asset? What kind of market is this in? Take a guess. Pause the video if you need to. That is a snapshot of a 13-year bull market of Bitcoin. I'm going to analyze this, but I want you to guess one more chart for me. See if you can guess this one. Which asset, what time frame, and what's going on with it. You can pause the video again or just watch and see. This is the entire history of the Standard & Poor's 500 or S&P 500 stock market index. 150-year, roughly, give or take, raging bull market. Wow, that's pretty impressive. Over here on the left, these are examples of fractals. And with fractal geometry, what's really fascinating about these is that the entire structure is but a reflection of the smaller structures within it. So you have patterns within patterns, and this is what is considered to be a self-similar structure. So if you were to like zoom in on this and really zoom in, and maybe I can show you an animation here in a second where you can kind of see this for yourself, you would find that you maintain the larger structure on microscopic level. So if you zoom in and zoom out, you basically are going to get the same looking structure constantly. Similar thing down here, this is what's known as a Sierpinski triangle. You have triangles within triangles. When you look at this, you have this similar structure. Well, financial markets are also fractals, and you can do the same thing as I kind of illustrated, whether you're looking at the market on a century plus long scale, or you're looking over just a little over a decade with Bitcoin, or getting down to a 1 minute chart, or even a 1 second chart. You're going to see market structure play out with, I guess, what we call bull bear or bull bear accumulation, the three main stages. That's really oversimplifying it, but I think we all kind of recognize that. You can see that play out on small time frames, large time frames, medium time frames. So let me illustrate to you, though, what I was talking about with an animation and a fractal, just to get a sense and a visualization. Imagine we were looking at like the S&P 500 from a 150-year time period, and we just started zooming in and zooming in on it. What kind of structure would we be likely to see? This famous set is known as the Mandelbrot set in mathematics, and actually can be created fairly easily. I'm not going to get into the math behind it. I created one of these a long time ago in a previous life of mine on the computer. And this is an illustration of the concept of self-similarity that plays itself out in many contexts. But the one I want to focus on, of course, is financial markets. But it's a lot more beautiful, I guess, in a certain kind of way to view it here. So let's watch the Mandelbrot set in an animation. And look, what do you see as we zoom in on the Mandelbrot set? You see more Mandelbrot sets. Nothing but just a bunch of Mandelbrot sets, one after another, self-similar to the original. And you start to ask the question, well, where does this begin and where does this end? Imagine zooming in from the S&P 500 all the way down to milliseconds, or even a smaller time frame than that. What kind of time frames do you think you'd be, what kind of structure, market structure, do you think you would encounter on these time frames? So I come back to Bitcoin on the weekly, stretched out from 2009 to where we are now in February of 2024. And I want you to kind of visualize, and I can't do this on TradingView, not easily, just zooming in and zooming in. I mean, I guess we can try to do that, so you zoom in, you zoom in, you zoom in, but we have weekly candles, so you're not really gonna, get that picture exactly the way you want to get it. Right, you got to kind of come down here and start screwing around with smaller time frames. Here's a 3 hour, and you can see that overall market structure plays out just like the way it does on larger time frames when you zoom in onto these smaller time frames. So, what's the point of all this? Why am I telling you this? There's this commonly held belief that Bitcoin moves in 4-year cycles. And I think this is based on the idea of the halving. And I think that, that theory has played out fairly well in the past. But does Bitcoin really follow 4-year cycles? Or is this just kind of an artifact of our imagination? Looking at the history of Bitcoin, the first cycle, which we could call it initial capitalization, but it still technically is a cycle through bull, bear, and accumulation. This only lasted a little over a year, and then we went into a bear market and had a brief period of accumulation before we went into another peak, and this was a double peak cycle in 2013, and then we had a very beautiful bear accumulation, and I mean, this is almost like a perfect bull right into 2017, roughly 4 years, and then we had a very jumbled up cycle. And did you want to call this maybe another bull market here, or is this just part of the accumulation phase? I guess if you're going to define bull market as putting in a new all-time high, then this wouldn't qualify, and you'd focus more on what's over here. So, we can say that from certainly from this cycle peak to this, or from the initiation of Bitcoin to the first cycle peak was not a 4-year cycle. From this peak in 2011 to the 2013 peak was not a 4-year cycle. The December 13 to December 17 was a 4-year cycle, and then the December 17 to roughly November 2021 was almost a 4-year cycle. We'll call it a 4-year cycle. So should we expect the next cycle to also be 4 years? We only have 2 instances of this, and 2 data points does not a trend make. So I don't really think it's particularly useful to think of Bitcoin's price action in terms of cycles. It could be dangerous because one of these days Bitcoin's going to fall off the 4-year cycle wagon and catch people by surprise, and that is going to cause a lot of people to get wrecked. So I want to present a different way of looking at Bitcoin that I use to try to stay away from the dogma of the 4-year cycle. And so, like many things in life, we have ups and downs. But most things in life tend towards some kind of equilibrium, and you have extreme variations one way or the other, with the outliers being very, very high up and very, very low down. But generally speaking, things in life like to approach some kind of equilibrium state. So what would that look like on this big Bitcoin chart? What you're looking at here is known as a log trend channel. And you can see that we started off by, and by the way, this is the mean line of the log channel, and this out here represents 3 standard deviations above the mean. This is -3 standard deviations. These are in increments of 1 for the bolder lines, and increments in, I think, 0.2 for the less bold lines. So this would be like 0, 0.2, 0.4, and so on. And you can see that in the beginning, Bitcoin shot up, sliced right through its log regression mean line, and then started to just basically straddle it for close to a year before shooting up to the +2 log regression boundary. And this is after it had originally tried to get to that boundary but failed at around the 1.6 and had previously gotten to the 1.4, and then Bitcoin got drawn back down towards this mean line, and it spent quite a bit of time riding above it, actually on the 0.2, before taking another trip up to the 1.6 yet again, which is a pretty big touch point, January 18, until for the first time in a really long time, despite a whip down to it in 2016, we touched the log regression line, mean line again, and actually spent the better part of the last cycle, really the entire cycle, just straddling this log regression mean line. And I mean, with the 2019 early peak, that was only 0.6 above the log line. Here is the COVID drop, which took you to -0.6, and then we were at -0.2. We sliced through to 0.2, and then we straddled the 0.4 for our first market cycle top, and then barely got to the 0.2, and then really fell out of the range. And we're actually lower now than we've been below the mean log regression line, really lower than we've ever been since the inception of Bitcoin. I mean, we're all the way down in a bull market, mind you, at the -1.2 log regression line, and we're trying to straddle the -1 log line. So we really took quite a dump, and you can see that every cycle we're moving down further and further away from this equilibrium line. So it begs the question, like, where are we going to find our next market cycle peak? I guess the way that I like to frame this question is not where are we going to find our next market cycle peak, but where are we going to find our maximum standard deviation away from one of these log lines, or maybe away from some kind of mean. I don't think you can really make such a prediction just looking at this chart, but you can tell this is log regression. So, even where we're at right now, this is 44,000 on the -1.2 log line. If we go back all the way to 2010, you're talking 20 cents. Okay, so you know, price is increasing as a function of time as long as you're on these log lines, but it is slow to increase. So instead of thinking in terms of market cycles, let's just think about straddling an equilibrium. Like, do you think we're going to come back up to this? I mean, where is a log line right now? Just last cycle, it was at, you know, roughly 50 something thousand. Right now, the top of this median line is already at $386,000. Imagine the amount of capital it would take to move us up there. That seems really unlikely to happen anytime soon. And you want to talk about plus one? Plus one's over a million. Plus two is off the chart. I'd have to like squeeze this down. What about down here at the bottom? Like if we were to just crash to minus two, that right now is at $9,000. Minus three is all the way down at $2,000. Seems extremely unlikely that we're going to head down there. It takes a long time for these movements to happen. And you get these brief times where they go down really fast or they go up really fast. It's almost, you know, it's like waves. It's like waves just, you know, and what waves like to do is they like to trend towards equilibrium. Now, I don't think that you can just look at this chart and get necessarily the most accurate picture just by looking at these log lines. So we need to throw some other things in here to start to analyze this more deeply. So within our log channel, I've placed another log channel. This is a logarithmic Fibonacci channel that fits the logarithmic price data to Fibonacci lines. And I'm going to really zoom in on this, and you see how it kind of normalizes these peaks and troughs like so. And you can see that when we're below the green line, that's going to be considered areas of undervaluation, relative undervaluation. When we're above the red line, that's going to be considered areas of relative overvaluation. And we just tried to get to relative overvaluation, peeked our head above it. This is the 618 logarithmic fib, and we got rejected. So if you scroll back, and it gets really ugly, so I'm not sure how much I really want to scroll, you can see that we just basically oscillate between overvaluation and undervaluation, but the oscillations are becoming less dramatic even with this normalization. And in the last, you know, we've managed to strike the top of this log line every single time that we've had a market cycle, except here we didn't in 2013, and I'm not going to scroll that far back. We also didn't strike it here in 2019, but you would probably argue, well, those weren't bull cycles, that was just accumulation, you know. And I mean, if you define bull cycles putting in a new all-time high, then I'd have to agree with that. So it's sort of interesting though when you overlay this Fibonacci log line with the linear logarithmic channel, and you can see the very top line right now is at roughly $154,000. The 854 fib is at 98,627. The 7639 is at 75,000. The 618 is roughly at $48,000. And this red line is an frequent area of resistance, just like the green line can be an area of support. So where are we going next? And are there any clues that we could look at? Might we want to pull up some more logarithmic stuff to get these clues? These are logarithmically weighted Bollinger Bands. And I'm going to be using these from now on instead of the regular Bollinger Bands. These are still 2 standard deviations away from the mean. And zooming in on our logarithmic linear channel, we can see that since October, we've actually been in the upper region of the logarithmic Bollinger Band. This is the 20-week SMA, and we did tag it recently in late January, but that wick got bought up pretty quickly, and here we are kind of bouncing off of it. We were straddling this throughout 2023, and then in our bear market you were mostly below it. So the logarithmic Bollinger Band gives you a really good idea of your market structure, whether you're in a bull, bear, or accumulation. And there, what's really interesting is I did a little look back in history and I found another time when the logarithmic Bollinger Band looked similar to this one. Can you guess when that time was? Take a guess. It was actually in 2016. The 2016-2017 cycle shares a lot of similarities with our current one. Granted, we were higher up on the linear logarithmic channel, but look at this structure. We're coming out of a bear market, very similar looking bear market to the one that we just had, and then we had our accumulation period. We had a couple wicks down to mark the bottom, and we retested that bottom right here. And then we went off, and this Bollinger Band structure looks so similar to where we are now. It's almost eerie. Now, we dipped in 2016 underneath the median line and really rode that line for a while into our second wave up. And then we had this memorable wick, and it was only just a wick that took us down to the lower part of the Bollinger Band, but we didn't spend a whole lot of time under there. And we would test this frequently throughout the bull run. But what this structure led right into was, in fact, the bull run. And you can see every time we tested that structure, it held until finally we got just way too high above it, and that's completely unsustainable. As you can see, nature brings us back to equilibrium. That's exactly what happened. So if we pull things back up to where we are now, you can see that we've been, straddling the upper portion of this logarithmic Bollinger Band right up to almost 2 standard deviations. We wicked close to it, but we didn't quite get there. The top of the band, by the way, at that time was around 53K. And then we tested the 20 week as support, held it as support, which was pretty impressive. That wick up, that was a wick down around 38-ish, and it got bought up pretty quickly. And we've been holding the 20 week as support, which is quite bullish if you ask me. So this way that our Bollinger Bands have been kind of turning up reminds me a lot. Let's just go back and look at it of what happened in 2016. Like, look at that bull from 2015 into 2016. And this was actually the early part of 2016. Not altogether that different from where we are now. We got rejected. It was more volatile to the upside and the downside, but we rode the logarithmic regression line all the way through the halving. And I could see something similar to that playing out, where this maybe turns down and we're riding that logarithmic line and just crabbing above 40K, and maybe we get a wick or two below it. I mean, it's certainly a possibility and something to consider. But regardless of what form our structure takes, the real question is, when we do go into mania, how high can we go? I can tell you that for sure, there's no way we're going back, excuse me, to the mean line. There's just no way. You're talking a Bitcoin price of $500,000 if that were to happen. That's where the mean logarithmic line would be in the summer. I mean, right now it's like at 300 and something K and growing rapidly. That's just not possible, in my opinion. I mean, anything is possible, but I certainly would not risk my investment waiting for that to happen. It's also extremely unlikely that we see any substantial drops. Like, anybody waiting for 12K is at the -2 log regression line. We haven't hit that in a very, very long time. Do I think we'll get down here again at some point? I do, but I don't think it's going to be anytime soon. The bottom of the Bollinger Band right now is around 33K, so keep that in mind for perspective. So I'm thinking we're going to start to squeeze this channel and probably crab. And maybe we get some wicks down, but maybe those wicks don't come until our next leg. If you look at what happened in 2016, going all the way back, we kind of crabbed for a while, like through the halving. It was just crabbing. And then we had another move up in May, and we got rejected at the upper Bollinger Band. At that time, that was around $800. And then we had a pretty dramatic fall with a wick all the way down to around $473. But that was bought up really quickly. And we didn't stay under the 20-week for very long at all. We straddled it right into our next leg and like straight into the bull run. So what if something like that plays out again, where we straddle the 20-week, and we hold that as support. The 20-week comes to us, or we go to the 20-week. I'm not sure which. 20-week right now on here is like, I mean, it's like practically at 40. It's like at 40K. So, on this Bollinger Band. So, maybe we just kind of straddle around here through the halving, and we could have, maybe a wick or two down. It's not going to look exactly the same. It never does. But then maybe we turn up again in May, and we enter our next leg of the bull cycle. And let's see if we're kind of having the mean line kind of straddle out here. Let me see if I can kind of come up with a path and draw it for potentially what might happen. Now I want to show you something. This is the exact 2016 fractal. We know for sure we're not going to play out exactly the same way. 2016 and 2017 fractal. But this is without diminishing volatility and without diminishing returns. So I do have to scale this down to account for that. And let's see, and not only that, this was in 2016. We're in 2024, potentially heading into 2025 in a bull run. That's like almost a decade later. We're sloshing around tens of thousands of dollars as opposed to just hundreds of dollars or thousands of dollars. So the volatility is going to be quite a bit less. Now, you might be really surprised when you see my contraction of the 2016 cycle, how dramatic it is. But this is what I consider to be a potential path. It would not look exactly like this because every cycle is different, but we are following 2016 certainly more closely than we've followed past cycles. So, and there's a lot more I can show you as to why I think that's the case. But what if in this cycle we only make it to this 0.73, I can't see what that is, but 0.730 or whatever fib that is, or 0.736, I don't know what that last digit is with this line covering it, doesn't really matter. And you have to look at our log lines and where we're at. Like, we slashed through this -1 log line and we've just been kind of crabbing around here. So this doesn't look like a very dramatic move, but it actually is. So you can see that if we kind of follow more or less what happened in 2016, then we're going to kind of crab through March and April, kind of maintaining structure around the 40K level. And then around the halving, we get a bump up to close to 50K. Maybe we even hit 50K. And then we kind of just crab our way through the summer, possibly sell in May and go away. I don't know if that's what's going to happen. And then here we are hitting 52. And by the time the end of the year starts to roll around, we are taking out our all-time high. And maybe we hit our peak, market cycle peak in, let's say, March of 2025, around 95, 92, 90, 90K, somewhere in there, 85 to 95K, let's just say, before we head into potentially a bear market or a double top scenario. More likely, in my opinion, to be a bear market. And the reason why I think that is, if you watch my last video, I think that the S&P is likely to find some kind of all-time high by the end of the year, similar to what happened in 1968 when Richard Nixon was elected president, and then the S&P tanked pretty much right after his election. So I think it was in December that we started to move down. If that were to happen today in Q4 of 2024, late Q4, early Q1, I imagine people would probably take their profits from the stock market and roll those into Bitcoin and just try to let the party go on as long as possible before we've drained every last asset. So I think a path like this is reasonable, especially given the economic economic data on the horizon, perhaps. But even a move like this would still make for a very nice, you could think of having a very nice altcoin and Ethereum season in here, and then Bitcoin dominance going up all the way into this parabolic rally. And maybe we just kind of dead cat a little bit and alts go on a crazy run once again. So I think this is a reasonable path. I don't think we're going to see valuations up here. I don't think we're going to come back to this line. Now, I could be wrong. We could make a nice little bowl shape, and that would more likely be my base case if I didn't feel like a recession was imminent. Um, so I just can't get that out of my head. I do think that we're going to be in a recession, possibly by the end of the year, early next year. So, and I'm not going to certainly, you know, I'm not going to make that prediction my namesake here or anything like that. If I'm wrong, I'm wrong, whatever. But you can look at this and form your own conclusions, which I think you should be doing anyway. I'm giving you the data. Form your own conclusions and tell me in the comments what you see. Now, I told you I was going to explain to you why I feel that our current cycle is much more similar to what happened in 2016 than, say, 2019 or 2020. And I think what happened in 2019 is actually more similar to 2013. And again, this takes away the idea of I have to use the word cycle, but I really wish I didn't. So let me show you something that has only happened twice in Bitcoin's entire history. I've put Bitcoin on the 2-week and turned on a 2-week Gaussian channel. And what you'll notice if we go back to Bitcoin's entire history, which I'll try to, get this on the screen, Bitcoin has only had 2 times where it has had a red Gaussian channel. One of those times is now. We're still in that red Gaussian. And another time was in 2015, 2016, just like 2020. We entered into this one in 2022, 2023, more just 2023, and we're still in it in 2024. It's lasting longer this time. But you can see that the 2011 initial capitalization of Bitcoin, we actually tagged the top of this Gaussian channel, and that bounced us off right to another top, which was our 2013 top, which bounced us off to that double top. So the 2011, 2013, 2000, and I guess that's still 2013, December 2013. This could be viewed as one giant bull market. I mean, you don't even have to you can count the 2000. You can count this as a triple top if you wanted to. And right after that, we got this correction, and the Gaussian turned red for the first time ever. And amazingly, the Gaussian didn't turn red at all, even with the COVID drop and with this 2018 bear market. This 2016 bear market or 2015 bear market was actually more devastating in terms of moving averages than the 2018 bear market. And the 2022 bear market was actually quite devastating too. You can see that we just basically had our what I really feel was our first true bear leg right here in 2015, and then this was almost just like, okay, I'm not gonna lie, this is a bear market, but the Gaussian was still green this whole time in the 2-week. It was like just choppiness, and then we got this double top, which is an extremely bearish sign, and inverse head and shoulders out of it. Got this falling wedge and a bear flag, and then we just kind of bounced out to where we are now. And this begs the question, well, how much higher can we go? And so with the Gaussian now, let me turn on that log channel. Now I apologize how messy this looks, but suppose that the Gaussian does turn green again, and it looks like it's probably going to fairly soon because we are concave up in the channel. And we see a move back up by Bitcoin. We continue to see it go up into the end of the year. Maybe that's where we cross through the previous all-time high, and then here's that log line I was talking about, which is minus 1.2. Anytime anywhere in here, you're looking at prices around 75 to 85K. I can maybe even move this up a little bit higher. Maybe you want to go for this log line, but we don't quite make it. That's also possible. We get to like 95, so we could get to the 0.8541. That is certainly possible as well. So I would be looking for a cycle top probably between 85, or let's just make it let's say like 75 to 95K, somewhere in there. I just don't think that we're going to break through 100K in a sustained way. It is possible we wick above 100K. That is a possibility. Certainly something to watch out for. But couldn't you see something like this playing out as a log regression rainbow, whatever you want to call this, the fib log kind of extends itself out? Does that seem unreasonable to you? What do you think? And what is this Gaussian telling us? Like, look at how clean this bullish momentum was in Bitcoin's early capitalization. And then it kind of, had leveled off a little and got all wobbly. And now it's red, and it's been red for as long as possible. I don't think this next green move is going to be necessarily as dramatic as maybe some of the past ones. And that's where I think it might differ from 2016. We could see a version of this where we go, we have this nice inflection. I think, that is certainly possible. It just maybe isn't as dramatic or as long before we head back into the red. So, my base case right now is for a left translated cycle peak sometime in late Q4 of this year, I'd probably be leaning more towards early Q1 of 2025, or I should just say Q1 of 2025. If a recession were to hit, let's say at the end of this year, I think there'll be a lag between the time the recession hits and the time Bitcoin falls. So just like there's a lag between the time Bitcoin hits its all-time high and altcoins fall, because altcoins will run after Bitcoin runs. So you have to kind of look at Bitcoin as sort of an altcoin to the S&P. One last thing I'd like to show you to explain why I don't think Bitcoin is going over 100K this cycle, or if it does, not over by much, is because if you look at the fib lines from the first cycle peak in 2011, drawn down to the local bottom of the bear market, you can see that when we went on our next bull run, we got our first peak right at the 1.618 fib, and our second peak at the 2.618 fib before we went into another bear market. So I want you to remember that, the 2.618 fib. Let's go look at what happened next time. During the next bull run, measured from trough to peak, we went through and just sliced right through the 1.6. There was some resistance at the 1.618, and we made it about 2/3 of the way up. I could put more fib lines in here if I wanted to, but you can just tell. We made it about 2/3 of the way up to the 2.618, unlike the previous cycle where we actually went through it. Then, in this last cycle that we experienced, look what happened. We got rejected at the 1.618 fib, not once, but twice before going back down. So we've moved down from blasting through the 2.618, being about 2/3 of the way through the 1.618 on the way up to the 2.618 fib, to not even making it through the 1.618 fib. So let's take a look at what things look like now. Okay, I'm not the best at price predictions, but I just drew out a potential path where maybe this cycle, Bitcoin doesn't get anywhere near the 1.618 fib. You see how dramatic the drawdowns can be. Maybe it breaks through the previous all-time high, but not much above it. Here is a sort of a double peak scenario, and I'm not saying it has to play out like this, where we're basically getting close to 100K. Maybe we wick to it or something, but we don't quite make it there, and we head down into our bear market. And this is about 1/3 of the way to the 1.618. So you do have to consider these scenarios. They could play out. They are possible. And that's just one of the many reasons that I feel that, Bitcoin is unlikely to make it past 100K this cycle, even though everyone, most people would want it to. Again, it could on a wick, and anything could happen. I could be completely wrong. Recession might not even come at the end of the year. Have to consider that possibility, but I'm just going with the data that I have now, with the contracting money supply, inflation going down, and all that other stuff, kind of looking at what's historically happened every single time that has occurred. There's usually a lag, right? And it takes a while. I talked about this in my last video, when recessions, so check that out if you want a more detailed deep dive into recessions. But a recession certainly would affect Bitcoin, and my base case is that Bitcoin goes down with it, bottoms before the S&P, and recovers faster than the S&P. So that's what I think would happen in a recession scenario. What that would look like on these log lines and what that would look like on the fibs, I really don't know. I can't think that far ahead, and I'm not going to try. But yeah, that's basically what I think for Bitcoin. Looking at it from, and and I also don't want to rehash other people's theories. I know that um, Steve from Crypto Crew University has a theory about uh, like a long-term resistance area, resistance zone. That's his idea. I'm not going to steal that idea from him. So check out his videos for that theory. And then I think, yeah, there's that theory of like every cycle peak or something is like 5.3x from, it's like a factor of five for each bottom to peak run. So, it was like 6,000x the first cycle, 5,000x or something. I mean, I'm not sure that I 100% buy into that theory. Steve actually explained that on his channel as well. I wanted to show you my own theories because you could look at other people's channels for other theories, and I think you should look at a variety of sources as you decide what you think is going to happen to Bitcoin and plan for it. Just want to remind you that nothing I said on this channel today or at any point is financial advice. Any price predictions or models that I make are for entertainment purposes only, and you should always do your own research. Please like, subscribe to my channel, comment on this post or on this video, and ring that notification bell to be notified of future releases. Thank you so much. I hope you have a great day. Bye.